Joining us now for a bit of business news, Kyle Rodda, the market analyst at IG. Good morning to you, Kyle. Thanks for joining us. So, big news is an earthquake that's happening at the moment when it comes to Westpac. Interesting piece in the Australian today about how shareholders aren't perhaps interested in just the scalps of the top one or two, but want the entire board to go. I mean, how do you see this playing out?
Well, I mean, the progress that we've seen in the last couple of days is something that the market's welcomed, for better or worse. I mean, there seems to be a little bit of pushback from Westpac leadership to see heads roll initially. But I suppose it's been no coincidence that over the last couple of days we've seen some major institutional investors either sell Westpac stock or, I suppose, speak of their discomfort with the current leadership at Westpac, and that's really what's prompted some of these leadership changes. So if we continue to see that pressure come about, you'd expect that we could continue to see some changes at the top at Westpac, and quite frankly it's what the market wants to see right now. We've had Westpac sell off in the last couple of days, but Hartz's exit yesterday did prompt a potential turnaround, and Westpac shares did happen to rally. So it's that kind of change at the top that markets are really wanting to see right now to actually feel confidence in the bank, and that might mean that I suppose that the senior leadership there are on perhaps a bit of a borrowed term for now.
How can we expect the market to react to the RBA governor's speech last night?
Yeah, well, we actually saw a bit of a reaction overnight just in the Aussie dollar, and you'd expect that to happen in interest rate markets overnight. I mean, for those who weren't keeping across it, there was a very academic speech, and the governor was very careful about making sure that it was a purely intellectual experiment rather than something that is a policy prescription about unconventional policy measures that the RBA could adopt in the future and what lessons we've learned from overseas experiences as to how the RBA would employ that here. Now, the RBA did say that no such things are required right now, that they still think the economy is going to pick up in the next 2 or 3 years, although it will run a little slower than would be seen as necessary to get inflation back to target and employment at notionally full employment. But the RBA did say that it does stand ready to do things like quantitative easing, as well as some other measures too to stimulate economic growth if it ever needed to. The market did see that speech last night as being something a little bit more positive for the Australian economy. So the Aussie dollar did pop, but it does show that the blueprint is being put in place by the RBA for unconventional monetary policy measures in the future, if it does need it. And I suppose if you do look at the trend of the way interest rates have moved in Australia and across the globe, at some point in the future, eventually, they probably will be required. So I'd certainly recommend anyone to look at that speech because it could be a part of our future very soon.
Kyle, growth data coming out today. What do you expect that to say?
Yeah, so I mean the next 3 or 4 days is interesting for the fundamentals of the Australian economy. We get a whole bunch of GDP partials leading into next week's GDP release and of course the RBA meeting. Now first, to start at the top, GDP is not expected to come in particularly strong next week at about 1.4%. Nevertheless, the RBA isn't expected to cut interest rates at this meeting. It's only considered a 1 in 5 probability by market pricing. But the next few days we get some basically business activity and construction data coming out of the ABS. And one thing that has been a little bit of a black mark on the Australian economy this year has been effectively building approvals, construction work done, things in that sort of sensitive side of the Australian economy, which has added to some concerns that weakness there will stop hiring intentions in that sector of the economy and could effectively lead into some of this slack that's worrying the RBA. So if we see continued weakness, today we get construction work done data. In that particular data, it may up the chances of an RBA cut next week, but in particular it will see markets probably price in, again, if it does come in weaker than expected and GDP growth next week is downgraded, the likelihood of another RBA cut come February being increased quite considerably, because right now we're looking at about a 60-40 proposition that the RBA will cut again in Feb based on softening fundamentals.
So perhaps next week is what you're saying, that there could be a rate cut. Is that what you're saying?
The market pricing is around 1 in 5. So you look at the interest rate futures curve in this situation, and the market's pricing in about a 20% probability that the RBA will cut next week. February is the key meeting right now. The market sees it as a sort of a 60-40 proposition, but the key will be in some of these GDP partials in the next 3 or 4 days that get released. And a lot of it is around building approvals, construction activity, all these things that are major drivers of economic growth in the economy. If we see that come in weak, then it might up the chances that GDP growth will miss next week. That'll up the chances the RBA may cut next week. But again, the real point of concern, the real, I suppose, meeting that's being watched is February's meeting. So it'll be around that one in particular that I suppose market participants will be watching for.
Okay, Kyle, appreciate your time this morning.